Hi everybody, this is Lara from pureelliottwave.com with an updated Ethereum analysis for you on Monday 20th of June 2022. My last analysis of Ethereum was on 9th of April and I had two daily charts. The first considered a low in place and the second allowed for more downward movement. The second was correct and the first was invalidated. It's possible again that a low may be in place for Ethereum, and the technical analysis has quite a lot of support for this view today. A third wave at primary and cycle degrees may have just begun, and I have a couple of things you can use to look for confidence in that view. If we see a breach of the channel on the daily chart, I'd have some reasonable confidence, and a new high above 1746.5098 would add further confidence. A possible target, really just a ballpark figure really, for primary 3 is 54226. Alternately, if we see a new low below 896.109, then a target for support for Ethereum is now calculated at 860, and all my charts now on a semi-log scale. At the monthly chart level, the entire price history of Ethereum sees from this low down here to this high a complete 5-wave impulse, and this has a really good look as a 5-wave impulse. Primary 1, primary 2 is a double zigzag, primary 3 is longer than primary 1, primary 4 a contracting triangle, and primary 5 is longer than primary 3. It doesn't look like it because of the scale of the chart, but primary 5 was 81.51 longer than 2.618 the length of primary wave 3. Primary wave 2 is a deep 94% correction of primary 1. Again, it doesn't look that deep because this chart is on a semi-log scale, so that's why I'm putting these notations here so that you know in terms of how far price travelled, how deep these corrections are. From this low to this high, there's another 5-wave impulse. 1, 2, 3, 4, 5, and this low is now in this low territory, so I cannot label this 1, 2, 3, 4. That would be invalidated. So the correct labeling is 1, 2, 1, 2. Cycle 1, 2, primary 1, 2. So the next move for Ethereum is very, very bullish. This is expected to be a third wave at primary and cycle degree. If this current bear market continues any lower, primary 2 may not move beyond the start of primary 1 below 82.8299. At its low here, primary 2 is an 83% length of primary wave 1. I'm putting that notation on the chart again so you can see the actual distance in terms of price travel, which is the important bit when buying and selling, obviously, price differences, and not be confused by the semi-log scale. This is a normal depth for a deep correction for any cryptocurrency for a larger degree second wave, and so it is absolutely entirely possible. It's now within the ballpark of what's normal for these bear markets for cryptocurrencies, so it's absolutely possible it could be over here or really soon, sooner rather than later now. Let's take a look at the daily chart where we're going to look at, I think, all of primary 1 and 2 from this low here. I think this is December 2018. This point back down here, from this low to this high, I have primary wave 1 with intermediate 1, zigzag for 2, impulse for 3, quick zigzag for 4, and a short, relatively short fifth wave, although it is longer than the first. In this instance, for Ethereum, primary intermediate 3 is 15.32 times the length of intermediate 1. That's not a Fibonacci ratio. I just want to note how long this third wave is in relation to this first wave. It's a lot longer than Bitcoin's intermediate third wave to its first wave. So in this instance, for this movement, Ethereum indicated a stronger volatility. An impulse is over up here, and now a double zigzag could possibly be over down here. It's an 83% correction of primary wave 1 within the normal range of 80 to 90% for these big second wave corrections. If it continues further, it may not move beyond the start of 1 below 82.8299. This is an Elliott channel drawn around primary wave 1 with the first trend line from 1 to 3 and then a copy on 2. The fourth wave ends midway within the channel, the fifth wave in the upper half of the channel, and now after this channel drawn around primary 1, it's now breached to the downside clearly by primary 2, and that's okay because you would actually expect the second wave to breach the channel about the first wave. This adds a little bit of confidence now to this labelling of 1 and 2. A possible target, just a ballpark idea, I really don't like calculating targets for these cryptocurrencies. They tend to just blow them all out of the water. So if price eventually one day approaches this target, then I may start to try and calculate higher targets. If my targets are wrong, in the past they've always proven to be too low, strangely enough. And despite a lot of bearishness out there and people telling me this is wrong, I'm going to stick with these high targets because I'm using past price history and projecting that forward, expecting the future to be same, different to the past. At 11.09 times the length of primary 1, that's an extreme Fibonacci ratio. The target for primary 3 is 54,226. Let's take a look at the daily chart now. From this high here, we're going to look at intermediate Y. This high here, the end of intermediate X within this double zigzag. Here's the second zigzag in the double, which is labelled intermediate Y. It's labelled minor A, B, C. From this high to this low, my daily charts differ. My first daily chart, this one, will consider what if there is a low in place, and then we'll go to technical analysis charts and have a look at the classic technical support for this wave count. And then my second wave count will look at what if the low is not in place, what would that look like, and what's a possible target for support. They are the same to here, here, and here, and thereafter these wave counts differ. This wave count sees 3, 4, and 5 over here at 896.109. We can have confidence in this chart if we see a breach of this channel with a full daily candlestick above and not touching this trend line. That's my definition of a channel breach. After that, if we see a new high above 1746.5098, the alternate would be invalidated at that price point, and then I would have further confidence in this first daily chart. And this confidence point only needs to be breached by a fraction of a cent on a tick chart, because those Elliott wave rules are absolute, so the confidence and invalidation points are also absolute. And the target's the same as on the weekly chart. Now, it's all the same to this point here. And on this daily chart, now we're looking at a different way of labelling intermediate Y. Still 1, 2, 1, 2, but instead of 3, 4, 3, 4, 5, what if 3 and 4 at minuet degree are over here? And then we have minute 3, 4, and we need a final little fifth wave down to the lower target to complete the structure. So what if this isn't the low? What if there is one more low yet to come before we see the end of primary 2? A possible reasonable target for minor C would be for minor C to reach 0.618, the length of minor A, at 860. Here's the length of minor A, 0.618, the length of that for minor C is at 860. Within minor C, minute 4 may not move into minute 1 price territory above 1746.5098. If we see a new high above that price point, it could not be a fourth wave correction within minor C. At that stage, the probability of the whole thing being over would be rather high. Now, I could consider the possibility that primary 2 could continue even lower as a triple zigzag, and I may have that as an unlikely alternate in the future, but the rarity of, well, not rarity, they're just not very common, triple zigzags, so because they're not very common, that reduces the probability substantially. So I'm not going to chart that just to make the number of charts manageable today, but just to say that is another idea I have considered and would possibly need to chart and publish in the future as an alternate. Classic analysis now. At the weekly chart level, we've got quite a big bear market. It's a big reduction in price value, and it's coming with a possible selling climax in this last completed week. This has a bullish long lower wick as well. It's fairly common for strong downward movements to end on volume spikes, but also equally as common, sometimes the volume spike isn't right at the end, sometimes it's just a little bit before the end. So this isn't telling us which of those two daily charts is most likely. The last signal from on balance volume was bearish back here. Price broke below support, which is now resistance 1295, and price is continuing lower with volume pushing it lower. And on balance volume is also making new lows, no signal here. RSI at the weekly chart level is oversold. This is really strongly bearish. This has only happened once before in the full price history of Ethereum, and I think it was that low in December 2018. Yeah, I just checked. It was December 2018, and that's where I have that low labelled cycle wave 2. That's a really important low for Ethereum, and those prices have not been seen since. That low to date has been sustained. So that was a really bullish signal when it happened in December 2018. I want to take note of this week. This is a very bullish signal from RSI. ADX is indicating a downward trend, but at the weekly chart level it's not extreme. If this was extreme as well, I would be very confident in a low for Ethereum, but because this is not extreme, I have a little hesitation. The low may not be quite in yet. Stochastics is oversold and ATR declining as price falls. Absolutely normal behaviour, particularly for the end of a bear market. At the daily chart level, this last completed daily candlestick completes a bullish engulfing pattern, and the last two wicks on these two candlesticks are bullish. However, the bullish engulfing candlestick pattern does not have support from volume, which is a small concern. But given the rest of this picture, very extreme ADX, it's above both DX lines and above 45, that's very extreme, and RSI oversold at the daily chart level. In that context, and the context of RSI oversold at the weekly chart level, I will give this quite a lot of weight, despite the lack of volume, and this supports my first daily chart, and that's why it's my main daily chart this time for Ethereum. No signal from on-balance volume. There's actually a little bit of bullish divergence between these lows here, or and a closing on a closing basis, the close of this candle and this candle, price moved lower, but on-balance volume did not move lower, but it's pretty much horizontal, so any divergence is really pretty weak. I'll just note that I'm aware it's there. There's a little range here from on-balance volume. A break above the yellow resistance line would be a bullish signal and would add just a little bit more weight to the bullish case. A break below the purple line support would add a little bit of weight to the bearish case, and then I'd use that target on my alternate daily chart. Stochastics oversold, ATR showing a little increase as price moves lower there at the very end on the daily chart. That's it from me with an updated Ethereum analysis for you. I hope everyone's having an awesome day.